Hi, everybody. Welcome to the webinar. This is the One Voice webinar, Washington, D.C. update, where we give you the latest on federal government policy, various issues that we've been following, what's happening in Washington, D.C. overall. My name is Paul Nathanson. I'm with the Policy Resolution Group at Bracewell, and Bracewell provides strategic communications support to NTMA and PMA, who is bringing you this webinar today in Washington, D.C. I'm going to be on this webinar with my colleagues, Omar Nashashibi and John Guzik, who are from the Franklin Partnership, and that is the lobbying firm for One Voice. They have really have made NTMA and PMA the voice of small, medium-sized manufacturers in Washington, D.C. So we will be presenting, as I said, the latest and greatest from Washington. But I also, this month, we're going to change it up a little bit, and I want to welcome Jack West from Federated Insurance. Federated Insurance is generously sponsoring the new sponsor of the One Voice webinars. So the One Voice webinars, excuse me. So before we begin today's presentation, I'm going to turn it over to Jack from Federated Insurance so he can say a few words. So Jack, over to you.
All right, well, thank you very much, Paul. My name is Jack West, and on behalf of Federated, we are extremely excited for the opportunity to sponsor today's webinar. Little background on Federated: we were founded in 1904, and ever since our founding, we have been a huge supporter and promoter of the association movement, today being exclusively recommended by over 500 state and national associations and buying groups. We're extremely proud of our partnership with PMA, along with several of the NTMA chapters as well. We applaud both PMA and NTMA for their efforts in advocacy and arranging for their One Voice webinar series. We're looking forward to hearing more and learning in today's webinar, and we'll of course continue our mission to help your members succeed. So with that, I'll turn it back over to Paul and appreciate again the opportunity to sponsor today.
Thanks a lot, Jack. We really appreciate Federated sponsorship of the webinar, and we look forward to hearing more from you. So today, let's talk about what we're going to be speaking about on the webinar. So this is the first time we're speaking to you since the end of the last Congress, the final days of 2022. A lot happened with the final flurry of legislative action and several important announcements. Then we're going to talk about the new Congress, the Congress that has just recently been formed with a new Republican majority in the House and the continuation of the Senate, the Democratic majority in the Senate. The House just recently organized itself into the named committee assignments, and they're about to get ready. So this is perfect timing. Then we're going to talk a little bit about regulations. The Biden administration has issued its regulatory priorities for 2023, and then a lot has happened on trade, at least a lot of announcements and a lot of activity on trade, tariffs, and also we'll give you, as always, updates on other policies and issues impacting the supply chain, your supply chain. So with that, I'm going to turn it over to John Guzik to get us started. Thanks, John.
Thanks, Paul. While many people look at Washington and look at the glass half empty, we're going to start this webinar with the glass half full. What did the Congress accomplish at the end of the last Congress? Well, if you're a DoD contractor or subcontractor, you were allowed to apply for inflation adjustment in your contract if you have had, because of the high inflation rate. The requirement for minimum distribution for your retirement account, they increased the age 73. I remember when my mom was around that, it was around 70, and she was required to take that distribution. She didn't like it, so they've raised the age to 73. And the Department of Labor's Employment and Training Administration, we were successful in increasing funding for the employment and training. And this was the program that provides a lot of the workforce grant funding, increased funding by $545 million. But
You know,
I
John,
can't.
before you leave, sorry, John, before you leave that one thing on the subcontractors as well, that should be within, so 60 days from the time that they signed that into law. So theoretically, sometime in February, DOD should be putting out an application. And that way a subcontractor, so even if your prime does not apply for the inflation adjustment relief, sometime in this calendar year, you as a defense subcontractor may on your own apply. So take a look out from NTMA and PMA. We'll be sure to put something out there. And if we have it by the next webinar, I believe February 24th, we'll be sure to include that there. Sorry, John.
No, good point. Good point. But then, you know, when you do look at Washington, there are things on the glass is half empty, and this is what didn't get done. Unfortunately, the Congress did not pass a year-end tax bill that many anticipated. There are a number of expiring tax provisions that many thought, you know, and many of these expiring tax provisions had bipartisan support, but basically the clock ran out. They were, and so a number of provisions that are important to NTMA and PMA members did not get addressed. And most importantly is extension of the R&D tax credit for immediate expensing. So today it has expired. So today you have to amortize your R&D expense over a 5-year period. In addition, the 100% full expensing for your capital equipment bonus depreciation, that credit was reduced from 100% to 80% starting January 1 of this year. It was our hope that both of those provisions would have been included in a year-end package. Moving forward, I mean, the R&D tax credit has strong bipartisan support, but everything in Washington is political, and it's going to take a bipartisan approach to address tax policy moving forward, considering there's so many expiring tax provisions.
Yeah, that's true. There's a real challenge with this. And I know we've been getting some nasty emails and phone calls here the last couple of weeks from folks that are now starting to see the reality of the R&D full expensing not being there, with some folks having at least 6-figure tax bills that are surprised that they were not expecting. We've been telling folks, since this is not a new law, to clarify, this was included in the Tax Cuts of Jobs Act of 2017. So everyone's known about this ceiling, or excuse me, this limit coming over at some point for both R&D last year of 2022. Now the path forward, and this is I think where it's important for you all to start thinking about what happens for my business when I've been thinking about it. Most CPAs with whom we've been speaking, I was on a webinar with one yesterday, they're advising their clients to file an extension if the R&D tax credit is of interest to you, or excuse me, if full expensing of R&D is of interest to your company, on the off chance that Congress does retroactively fix 2022 for you. Now, from my standpoint, and John will jump in here, I think the further you get beyond March 31st, the harder it is going to be for U.S. Congress to retroactively give you the 2022 back for research and development expensing. So my belief is what I think you could see a scenario. One scenario is, yeah, you get your retroactive, and we'll talk about how that could happen in a second. Or what they could do is just do nothing and allow the current law to stand until they get around to the big fiscal cliff in 2025. And the other option is they give you 2023, but give you a gap year in 2022 that is amortized over 5 years. And that just creates a whole lot of havoc and headaches that are out there. So keep in mind that you're amortizing your 2022s over 5 years, and your 2023 R&D is now amortized over 5 years. John, that brings us to the vehicle, which is why I did want to spend here a second on this. What would be that vehicle? You mentioned bipartisanship. There's no bipartisan tax moving prior to April 18th tax day. So my gut tells me, John, if we do have something, it would probably be tied in with the debt ceiling and all that spending. And what other vehicle do you see?
Yeah, that's the thing. I don't see a vehicle. And to your point, I agree with you, Omar, that March is a critical deadline, because the issue that is sucking all the oxygen out of the air in Washington is the discussion over the debt ceiling. We've already reached the debt ceiling. The Secretary of Treasury is going through extraordinary measures to keep paying the government's bills. Well, we're going to hit a hard deadline sometime in June through August. Hence the importance of that March deadline of getting some tax provision passed. But to your point, Omar, that in the debt ceiling discussion, Republicans want spending cuts. Democrats do not want spending cuts. Republicans would prefer cuts in non-defense spending. Democrats will want cuts in defense spending. Some want across the board cuts. Some want cutting specific programs with a scalpel. It's yet to be determined. Republicans nor Democrats are putting any cards on the table right now. And to your point, is some may agree to pass the debt ceiling without spending cuts if you do provide some sort of tax relief.
Right. And so let's look at the timing of that. I do increasingly believe you'll probably see it sometime in the first week of August, because that's normally when lawmakers have already left or are scheduled to leave Washington for their month-long August recess. And I think that's probably going to be the pressure point that the administration is going to see if they've got leverage either around there or around July 4th. So that's the debt ceiling. Now, to your point on spending cuts, in just quick 30 seconds, if anyone's got a piece of paper and a pencil, this is a great way to look at the federal spending. So let's say the federal government spends $1. Our receipts that we take in as the federal government is 83 cents. So we're bringing in 83 cents, we spend $1, you're 17 cents short before you do anything. 62 cents out of the dollar is called mandatory spending. That's Social Security, Medicare, Medicaid, and a few other entitlement programs. So that's 62 cents on the dollar is mandatory that most Republicans and all Democrats are saying we won't touch. Then you get into your next step. 8 cents on the dollar is interest, bond payments, and others, and that brings you to 70 cents on the dollar, which gives you 30 cents is your discretionary spending. Of your 30 cents discretionary spending, 14 cents on the dollar is defense spending, which most Republicans are saying we won't touch. So if they don't touch the 14 cents, that's defense spending. That leaves you non-defense spending at 16 cents on the dollar. And keep in mind, I started this with you're already 17 cents in the hole on your tax collections. So no matter where they cut, it's never going to be enough to get to what some of the talking points have been out there. And so that's really where their challenge is and why you're going to see some kind of a showdown, I think, this summer. But bringing it back to the tax credit, I think if you could get a deal, that would be it. As of right now, we don't see a whole lot of bipartisanship happening around town. With that, speaking of taxes, John, numbers you need to know, tax filing season is already open.
How many knew that today was the Earned Income Tax Credit Awareness Day? I just read the press release from the Department of Treasury, making sure people are aware of the Earned Income Tax Credit and those who would qualify to take advantage of it. Other upcoming dates, the filing deadline the IRS has announced is April 18th this year. It's not April 15th. And then if you choose to seek an extension on your filing your taxes, the extension has been extended to until October 16th to complete your taxes. However, if you live in California, because of all the rains that they've had in this and this declaration of state of emergencies, and depending on what county you live in, you have an extension of your taxes until May 15th.
Yeah, as you do, I didn't put this on there, sorry, but Alabama and Georgia, you also have a May 15 deadline as well, but California was the most recent. And civil penalties, this happens every time or every year around this time. OSHA makes the adjustments for the serious and willful repeated penalties that they've got out there. So keep that in mind, that is something that they are going to be focusing on and increase, especially on the willful and repeated. That's something that the administration on serious and repeat offenders has said that they're going to make a real focus on there. And this is a last minute one that we just threw in here as a press release that was just put out yesterday by OSHA and the Department of Labor, and where they're changing their policy and putting a greater emphasis on certain violations that are out there. In this case, they're going to be looking at the reason we flagged this one, you'll see in the second paragraph. These conditions include lockout, tagout, machine guarding, respiratory protection, falls, and a few other areas on record keeping. What they want is they want to see the OSHA inspector go in and give us instance by instance citation. And what that means is they don't want you to group violations together, not you, but they're reminding their OSHA regional administrators and area directors of their authority to not group violations and instead cite them separately to more effectively, quote, encourage employers to comply with the intent of the OSHA Act. That's where this is going. Again, with a lockout tagout rule that we're about to touch on here in a minute, we just wanted to flag that as well. But John, I thought there was some interesting news just on the union front. We saw some numbers come out.
Yeah, union petitions, those are unions that are petitioning for recognition in the businesses, has gone up 53%. That's not a big surprise considering the President Biden has such a strong union backing. We've seen union membership grow to 273,000 this past year. But when you look at the number of union membership comparable to the rest of the population, it has actually dipped from 10.3% to 10.1%. And so while union membership is growing, it's not keeping up the pace with the population.
And let's just jump in now into forecasting the future with the Biden administration on regulations that Paul alluded to earlier. Twice a year, the federal government is required to issue what they call their unified agenda of regulatory and deregulatory actions. Basically, it's a list and a preview of all the rules and proposed rules and regulations that the administration is going to put forward in the next 12 months. And just like in government, this is the fall 2022 regulatory agenda was issued on January 9th. So the next slides that we're going to go through are going to be those that give you an idea of what the regulations are going to be coming forward. The way to read the next several slides is you'll see down below is a date. This means that in May of 2023, they're going to issue an NPRM. That is a notice of proposed rulemaking. That means they're going to propose a rule that they will then release to the public for your input and our input, and then it will move on to the final rule stage. And that's how you read these. So for example, the worker walk-around representation designation, what this is reviving an Obama era policy that allows a union rep, even for a non-union shop, to attend a OSHA inspection at the request of employees. So they allow that union representative to do the walk around if that OSHA person says it's necessary, reasonably necessary. So again, it's another way tying into that previous slide, just to give you a heads up on that one that's coming. And that's how you take a look at these next several slides as we come over. But John, this overtime one, it's not really laid out. This is a big one though.
This is a big one, but this is another one that was proposed in the Obama administration, was repealed by the Trump administration, is being revived by the Biden administration. And they're increasing the overtime threshold. Again, as you read it, May 23rd is a notice of public rulemaking. And so that will impact many of the shops that we represent.
Yeah, the current threshold right now is 35,568 for your executive, administrative, professional, and your clerical classified employees that are salaried and are non-exempt. And therefore, what we're hearing is that they may try to increase that 35,000 to at least 50 and possibly as high as 58,000, meaning anybody earning below that threshold would be subject to time and a half. When we did our survey during the Obama era, it showed us that probably about somewhere between 4 and 6 FTEs on average per company were likely going to be affected. And so this impacts the HR folks. When you're onboarding somebody, this is something to consider as well. If they do in fact release this rule in May, my belief is going to take effect on January 1st, which means it will not have much time outside of some court actions that are there as well. But one slipped a little bit. Joint employer, John, looks like they're moving forward, even though it might have slipped by a couple of months.
Yeah, it slipped to August of 2023. Just to refresh, joint employer, specifically those members who take advantage of temporary agent worker folks, 2 or more companies that have hiring, firing, and determine the employment status of your temporary workers would fall under the joint employer rule. And this has been pursued in court, has tremendous interest in Congress, and it certainly has an interest in the administration, but it's a complicated issue, hence it was put off. It slipped by a couple months.
Speaking of courts, I think this one's going to court, John, the FTC non-compete rule.
Yeah, this is a new one that's just popped on our radar screen, and we're interested in hearing from NTMA and PMA members on this. And they want to ban, the FTC, the Federal Trade Commission, wants to ban non-compete clauses in contracts. And we believe this will have the most significant impact with our manufacturing members, specifically at the higher wage levels. Some of your engineers who may have a non-compete clause. We quickly joined a coalition of like-minded industries and signed a letter on behalf of PMA, and NTMA signed a letter calling for an extension of the comment period. The comment period was set to expire on December of 2023, and the letter basically calls on the administration to extend the comment period because this is such a new issue that's just popped on the radar screen and is relatively controversial.
Yeah, it certainly would affect a lot of engineers, C-suite folks, sales team people, things like that. Something to watch out for that's out there. Also sticking with the Department of Labor, coming back to rather electronic OSHA forms, filing your 300 301s and your 301As. Before we get to this proposed rule, please keep in mind, we put this in the last webinar, that you've got to get yours filed. Is it March 2nd or March 3rd this year? For those of you that have to have it filed electronically, but do not wait for the last minute. You do have to create a new login for your company. I had to do it for myself for global entry. Every person and company needs to have a login.gov account if you're going to be doing business with the federal government or submitting forms. They're trying to consolidate it so you don't have different usernames for your various non-DoD agencies. So login.gov, need to go on there, get your filing done for March. What this proposed rule that's going to come out, or final rule rather, that's slated for March, would be to lower the threshold from 250 employees or more to make it 100 employees or more would be required to file your 300 301s and your 300 As annually. So that would be the change on this one. Something again that we've heard about for some time, but this is a big one, especially for a lot of our members that we wanted to put out there. Lockout tagout is a proposed rule, and it is now finally getting a scheduled proposed rule to come out in July of 2023. We had commented, as you see, in 2019 during that RFI process. We did file comments that summer going through and really focusing on the Kershaw exemption of something being routine. So think of your tool change. Those are the things that we don't want a machine to be fully shut down, unplugged, disconnected. Just the startup times would be really disruptive, loss of productivity, and all the other issues that we cited previously, especially since there's also a lot of machine guardings and other opportunities here for protection that weren't really envisioned when the rule was first organized. So lockout tagout is a big one. Mechanical power press, they are still analyzing comments as of December of 2022. They have not issued, following the RFI they had, but they have not issued a date for a proposed rule on that one yet. But lockout tagout should be one that's going to affect quite a few people. And then also on OSHA, this heat rule, that we're now moving on to what we call a SBREFA panel. The SBREFA is a Small Business Regulatory Enforcement Flexibility Act. What that does is it starts a 60-day clock. It says January. They're not doing it. We heard last week it'll probably be in February when they announced in the panel SBREFA to review when the heat index reaches 80 degrees Fahrenheit or more. OSHA wants to put restrictions, PPE, other requirements similar to what California has for outdoor workplaces, administrative engineering controls, et cetera. So once the SBREFA is impaneled, that's a 60-day clock, which puts us at possibly, we might see a proposed rule at some point. I think by summertime would be a good time for them to release this proposed rule, and it could be pretty significant that's out there. John, silica is another one that's out there, a few others from OSHA. Don't know if it affects that many of our members, so we won't spend too much time on it. But the climate change disclosure, John, I think similar to that FTC rule, that one's getting a lot of attention with an April final action time period.
And there's a lot of uncertainty of what the intent of what the SEC is doing and what impact that it's going to have on industry, to be able to classify what impact the businesses have on climate. And so this is a very complicated issue that probably will be pursued in the courts.
It is, and I think the importance of this one is if you think back to conflict minerals and Dodd-Frank Act, when we were working on that issue for many years, what they did in that instance is they targeted the publicly traded companies, and then they expected the companies then to go throughout their supply chain and identify where there was tin, tungsten, tantalum, or gold coming in from Democratic Republic of Congo and the 8 surrounding countries. So what they did is they effectively made your OEMs the police to come down and ask a bunch of requirements of you all. And we've taken surveys right now to identify how many of our members have already started getting inquiries on ESG, for example, from their customers, including government. And it's over a third. We're getting close to about half of our members have been now inquired, and about 20% of our members report that they already have an ESG policy in place at their shops, according to the survey that we did of both NTMA and PMA. So keep a lookout on this one, especially because you as an individual company may not receive an inquiry from the federal government, but we would not be surprised if you have not already at some point this year you will start getting more inquiries from your tier ones and your OEMs that are out there. But deja vu all over again, John. Waters of the U.S. Finally.
Well, I don't know about finally, but it is the ping pong ball, very similar to some of the other rules that we talked about, proposed by the Obama administration, changed by the Trump administration, and pursued again by the Biden administration. This one is a little more complicated because this case went before the Supreme Court. And so we do expect not only just one rule, but 2 rules being released, one in November of 23 and then July of 24 because of the recent Supreme Court ruling on waters of the U.S.
Class 2 and Class 2B and Class 3 trucks. So I'm not the auto guy, but I think Class 3 is the 10 to 14,000 pounds, and the 2Bs I think is the 8 to 10. what I remember reading. Those are now on the list of additional emissions rules that are pending coming out. You can see in March 2023, they expect to do this one for the light duty and medium duty vehicles. This is separate from the phase 3 action. They just completed a phase 2 action in December on heavy duty trucks. They're going to do the phase 3 on the heavy duty. Those are going to be the ones that are getting up to the 30,000 pound range. And in addition to that, obviously, they've got the passenger vehicle rule that is continuing to move forward in the fights with California and their jurisdiction out there. Before we jump into steel, there were 3 proposed rules that were put out. And anyone that's interested, by the way, we have a Excel tracking matrix that lists 40 of these. And we selected just a handful that we thought might be of most interest, but there's 40 of them that we're planning on being in some level tracking or actively engaged in on the regulatory front here moving forward. And this one is meaning we're going to get some changes on the steel and aluminum side. Hopefully sometime in the next month or two, we should see a proposal. They're also going to make changes to the generally accepted exclusions, which means that there's some that you don't have to apply. They just granted exclusions. They're also slated in February to make some changes on that front on the trade side. So that's just where we stand right there. But turn it over to Paul here a little bit if you want to jump in on some of the exclusions that we just mentioned. I can't hear you if you're speaking, Paul. Nope. Okay. Go ahead, Paul. If you want to jump in on the commerce on the exclusions, there's quite a few out there.
Yeah, can you hear me?
Yep,
Yes.
all good.
Okay. So on your screen here is a update that on the number of steel and aluminum exclusion requests and those that have been granted and denied. This update is provided by a member, a staffer on the Hill, Mike Dankler, who's been tracking exclusions since really they started in 2019. He was with Congressman Walorski on the Hill, and then he went into the private sector, and he recently joined the staff of Congressman Yakims, who replaced Congressman Walorski, who tragically died in an auto accident last year. But Mike has sent this out to a group of us. He's, as you can see on his note, the way that the portal is working right now, he's got limited visibility on timeliness and also on objections. So if you're having any issues with exclusions, we'd like to hear about it, because there are some coalitions that are still around that are, and also obviously your associations who can have good relations with commerce and can alert them to these issues, and oftentimes we can be very helpful. The next, just an update on the steel benchmarker report. This report came out, I believe it was yesterday. This is the updated hot rolled steel prices. As a lot of you know, after declining for several months last year, we've recently seen a spike in steel prices. It's being reported on by various media outlets and closely watched. As you'll see by the next chart, we send this update out every month when Steel Benchmarker puts their report out. We've been tracking steel prices since 2018, since the imposition of the Section 232 steel and aluminum tariffs. And we have, more importantly, I think, is we've been tracking the price difference between the U.S. and China and the U.S. and Europe. The part that's circled in red is the current price differential. As you can see, that it's narrowed quite a bit. The last category is not part of the Steel Benchmarker report, but is available by the American Iron and Steel Institute, which is the steel producers association. They publish the capacity utilization rate every month, and that is, the domestic capacity utilization rate. Right now, it's about 72%, which is low as it's been since about the time that the tariffs were imposed. As some of you may recall, that the justification for the Section 232 tariffs in part was to get the capacity utilization rate up to 80%. That was the Trump administration and Commerce's Department's reasoning. It was well above 80% for most of the last several years, but it has dipped. Just making you aware, because this is a talking point that the steel producers often point to. really it's I'm just making you aware because it's a talking point. There's no magic to that 80% number, except that's the number that the Commerce has picked out as the number to reach for the domestic steel industry.
Yeah. And I've got 12:30, so for those that have any questions, we're going to get ready to wrap up. Please feel free to type them into the box over there. And continued trade action. Obviously, China is certainly top of mind right now with a lot of folks that are out there. The Biden administration is obviously looking at import-export numbers. Here's just a quick chart Bloomberg put together. Again, it's Chinese numbers, so you can only trust it to an extent. But this is what they're reporting that they're sending out and bringing in from the U.S. The U.S. numbers getting back to pretty stable pre-pandemic lines, as you can see. And then similar on the Chinese side, their imports into the U.S. are just up a tick. One thing just to quickly flag, as we mentioned, that the U.S. Trade Representative is undergoing a review. It's required by law after 4 years. Trump put the tariffs. There's a 25% tariff on 6,800 imports coming in from China, 7.5% tariffs on 3,200 imports coming in from China. They're all being subject to this 4-year review. They received about 1,500 comments. We expect this review to take several months. We do not expect a decision on whether or not they're going to lift tariffs likely until late spring, if not into the summer. Their options are do nothing. We don't think that's going to be the case. They're unlikely to lift all the tariffs on China. They are more likely to lift some, keep some, and then restart an exclusion process that we could likely see an announcement on. If you ask me to guess, I would say in August, because you have another round of exclusions expiring in September. So that's where we are on that. But Paul, we'll throw it right back to you for another minute here.
Sure. So just pointing out a nice story that highlighted the chairman of both NTMA and PMA, the current Doug Johnson, and immediate past chairman Alan Ortner. It was a nice profile both of NTMA and PMA, and the fact that 2 Connecticut manufacturers were at the time heading the associations, and also gave a nice shout out to the work in Washington, D.C. and the influence that your One Voice team has in D.C. So it was a nice profile piece. And as always, if you want to keep updated between these webinars in a more conversational manner, John and Omar and myself, as well as my colleague Caitlin Sickles, publish a new episode of the Talking with One Voice podcast. We put one up about every 2 weeks where you can hear about a 20-25 minute conversation about the latest of what's happening in Washington. A lot of things that we covered today, plus a little bit about what's going on with the politics. It's a nice listen. You can get it wherever you pull down your podcast.
Yep, and John, we're gonna have a busy year on regulations, I think by everyone saw, so support for the advocacy program is always appreciated.
Yeah, we not only appreciate the support for Federated Insurance, but also appreciate the support of individual members who join this monthly podcast with us every day, and those who have already contributed to NTMA and PMA's Government Affairs Fund or the Advocacy Fund, which is corporate dollars, or contribute to the PAC. So we do thank you. Those who haven't, you can still contribute, and it'll help us continue to maintain this content moving forward and help us address a lot of these regulatory issues that we just touched on.
Yep. As always, if you don't know the platform, please type in any questions you might have in the bottom right corner. We'll stick online for about another 20-30 seconds, see if anything comes through. But as we mentioned, it's going to be pretty busy. I'll fill a quick 15 seconds. Paul mentioned the House has put together their committee organizations. The Senate has not yet fully organized its committees. Republicans have not appointed theirs, but that should start coming together next week. Next week is also probably the first full real week of work for the U.S. House that they finally organized. I think someone's typing in a question, so we'll sit tight for another second or so.
Hey, Omar, you want to fill them in a little bit about the Select Committee on China?
No, that's right. Thank you. There has been a new committee that the House of Republicans had created. It's called the Select Committee on China. And what that is, it's in the House of Representatives. It did get bipartisan support to start. And so they will have both Republicans and Democrats on it. It's not called a standing committee, which means it's not going to be making and drafting legislation, but it would be an area that's out there to really focus on. And what's going to be chaired by is Mike Gallagher. He's a Republican from Wisconsin, Marine, very active on technology issues, was very instrumental in working on the semiconductor law to try to counter. There's a handful, about a half dozen or so members that are really focused on the technology race between US and China that's out there. So that's something that we we are going to be focused on as well. So we'll take a look at seeing what comes out of it. They haven't officially staffed up yet. They're going to start that process shortly, but that's going to be another opportunity for us to be able to have input with somebody that we worked with closely on the Section 232, since he was one of the lead sponsors of legislation that we endorsed dealing with the steel aluminum tariffs. And so we think he's a good choice to be there with regards to that issue that's out there. We did get a couple questions out there. Dan, yes, I've been in touch with the Copper Association on that. There's an effort, the U.S. Geological Survey is thinking about whether or not to list copper as a critical mineral and having it on their list there. There's certainly copper is very critical. You need to have that as a source, but our concern that we always have is when people start going down this pathway, usually it ends up in import restrictions and constraints on the marketplace and the availability of the metals. And we've seen that happen constantly on the steel industry. So we've been in touch with their lobbyist, and we'll see where we end up with that one here by the end of today on that as well. And also do you see the rulemaking related to cybersecurity, CMMC, going the way of conflict minerals, where government puts the requirement on the publicly traded companies to deal with? Anything you're hearing on the interim rule versus proposed? That's an excellent question. They were updating, and they don't even like it when you use the phrase CMMC anymore from the DoD folks. Yes, we do see that trickling down. We actually believe that that is going to go well beyond DoD and is ultimately going to be something that publicly traded start to adopt on their own. We've seen some cases of that. For those that aren't aware, this started under the last few months of Obama, and then in December 2017, Trump pushed it through. There's a number of requirements. You have to have certain level of securities, and depending on what you all are doing, that cybersecurity requirements will have to be in place in order for you to be a clear contractor in many areas. So yeah, we do believe that's going to be trickling down. And our understanding was that sometime this, not spring, but late winter, around now February or so, they were supposed to be moving forward with additional after the hiccups that they had 2 years ago on it. So yeah, we do think that they're going to move forward ultimately with more proposed than guidelines that they've got right now. Any other questions? And we're right at 35, a little after that now. No, thank you everybody for joining us today. We will have another one. I believe it's going to be Friday, February 24th, whatever that Friday is, the last one in February. Until then, please, as always, shoot us an email, anything you need from us. And similarly, please take a look at our podcast when we release our next one. Thanks, everybody.